A warm welcome to you, my dear children. We meet again with another accounting lesson today, and this is the second accounting lesson that you come across in the grade 10 syllabus. The second accounting lesson after we finished the introduction to accounting. That is the first accounting lesson. This is the second, the accounting equation. Right. I know that the students who got together with me for the previous lesson, in our previous sessions, we learned about the basics of accounting. Yeah, the basics of accounting. Now today, we are going to move one step forward to learn the accounting equation. Right? Accounting equation. So children, after finishing Unit 4, we have come across to Unit 5, and this is the second accounting related lesson in your textbook. Grade 10 students. Well, that time which I mentioned in my previous session, I mentioned when we get into accounting, when we start the accounting, the actual accounting entries, and I told you that there are numbers and calculations involved, right? Digits and numbers and calculations, adding and subtracting. All these are involved. Tables and accounts and statements and debits and credits. All these are involved. You just brushed the surface of accounting in the previous lesson. Now we are going to get into that fun stuff. We are going to get in, you are going to get in to the fun stuff. Right. Let's enjoy the lesson. First of all, children, I want you to notice the things which are on the cover page. This is the cover page of your textbook. The cover page of your textbook, right? What things are here? What can you see here? Well, you can see charts, graphs, fluctuations of something shown like in this graph. Nothing to worry about, it's just a graphic design. Okay, the important stuff. What do we have here? We have assets. Assets are shown in a circle. Assets. Now we know what assets are, right? Assets are shown in a circle, and then we have equal mark right here. Liabilities are on the other side, and that is inside of this circle. What's happening? Well, you're going to learn what is this connection between assets and liabilities. Not only those two, we have plus equity, owner's equity also. Let's see, let's learn. What is this equation? Accounting equation, what is it about? Going forward, there's a simple breakdown of your subtopics. Under the main topic, topic number 5, we have 5.1. That is the first subtopic, accounting equation. That is an introduction. So I will write introduction. Introduction only. It is an introduction to the accounting equation. All right. Next we have 5.2. Construction of the accounting equation. Construction of the accounting equation. How to construct, how to develop the accounting equation step by step. Right? That is shown here. We are going to learn that in 5.2. And the next subtopic, 5.3, how do business transactions affect the accounting equation? How do business transactions affect the accounting equation? You know that every day thousands of transactions occur, or we say incur, in a business. Well, there can be thousands of transactions, there can be hundreds of transactions, or even there can be few transactions sometimes. It depends on the business, the crowd, the market of the area. It depends on many factors. However, you know that transactions incur every day in every business. Whatever the business is, it doesn't matter, children. There are many types of transactions. Not only transactions done with the customers. Not only transactions done with the customers. There are other types of, various types of transactions. Right? How do business transactions affect the accounting equation? We are going to learn that. Finally, we are going to learn situations that change the equity. All right. So we are on the way to learning all these related to accounting equation. Shall we? Now there is a question on the screen to start with, on top, and it is in red color, so it must be something important, right? Yeah, it is somewhat important, of course. What is accounting equation? What is accounting equation? I'm not going to answer that, right? I'm not going to answer that, and I'm not going to ask you to answer that. Let's just keep it for a while, for some time. Let it be. All right, now you must be curious. What is Sir doing? Isn't he teaching? What is this equation? You're going to learn. No worries. First, I'm going to move on to this. The main elements of the accounting equation. Main elements. As you know, we saw all these three elements in the cover page. I have circled assets. Can you see assets? And I have circled liabilities. Can you see liabilities? And I have circled equity. So on the cover page itself, there is an equation. Assets equals liabilities plus equity. What do you think? Is this the accounting equation? Let's see. On this screen it says main elements of the accounting equation are these three. Main elements. So we have assets. First of all, we have assets, the first element. Secondly, we have equity. We have equity. And third, we have liabilities. The same elements you saw here: assets, equity, and liabilities. These are the main elements. So this must be the accounting equation, right? Yes, children, it is a very simple equation. Let's see. Let's look at it in detail. First of all, we have assets. All right, it should not be in red color, it should be in blue color. Okay, we have assets. And second, we have equity, and we have liabilities. How do we construct the relationship between these three elements? That is the accounting equation, children. The relationship between these three elements. First we have assets, then we have equity, and finally we have equity, and then we have finally liabilities. The relationship between the relationship the interconnection between these three elements are shown from the accounting equation. Still, I'm not going to write the definition here. Okay? So, we'll see first how the accounting equation is constructed. How it is constructed. How the accounting equation come out. How does it come out? Then I will define, I'll give you a definition. It's a simple definition. You already know that these three are shown by the accounting equation. The interconnection between these three elements. Let's see how it happens. Children, first of all, this is the most simple version of the accounting equation. Easy things first. This is the easiest or the most simple accounting equation version of the accounting equation, the simplest version, right? It says assets are equal to equity. Now in your heads, I know that you are getting those pictures. What assets are, how did we define assets, and what equity is, and how did we define equity. What is equity? You should be getting the pictures. You should be getting the pictures. Somebody tell me what assets are. Yeah, can you tell me? You, son, can you tell me what assets are? Well, if you watched the previous session, the introduction to accounting, we did in a very clear manner, in a very explanatory manner, in detail, what assets and what equity and what liabilities are. If you remember, can you tell me? Tell me. What assets are? Children, assets are all the physical resources, all the resources in a business, very simply. all the resources in a business which are used in business activities are called assets. All the resources in a business. It can include the land which is used by the business, or the building is situated where that land is an asset. And the building also must be an asset. It must be an asset, right? Of course it is an asset. Of course, yes. Building, land, building, and all the furniture which is inside the business, the shelves, the showcases, the sofa sets, everything. If it is a showroom, the partitioning, everything inside the building, furniture, equipments, machineries. If it is a factory, there can be millions and millions worth of machinery, plants and machineries. Everything is used in the day-to-day running of the business. Okay, shall I stop at that? Or do you want any more explanation? Any more about assets? No, right? All the resources which are used in business activities which bring future benefits to the business. All the resources. That is the definition. Okay, and these assets are generated, the assets have come to the business as a result of a transaction, past transaction. Those are assets, right? Once I will repeat, only once. Assets are all the resources used in business activities which have been generated as a result of a past transaction, and the things that bring those assets, they bring financial benefits to the business. All the resources. Okay, equity. If I ask you what is equity, how did we define equity in the previous session? Somebody. It's you. Can you define equity? Right. Okay, I'll do it. Equity is out of the assets, all the resources. Equity is the resources which belong to the owner. Not clear? In other words, the resources which have been brought into the business and invested in the business by the owner. That is equity. Alright, so in that case, you should have noticed that, and on this side also we have resources. Then what is the meaning of saying resources are equal to resources? In the equation it shows that assets are equal to equity. And we know that resources, all the resources in a business are called assets. Out of those assets, the resources which belong to the owner are called equity. Resources which belong to the owner are called equity. Resources which belong to the owner. So on this side also we have resources, and on this side also we have resources. Middle we have the equation, the equal mark. What is the point? Assets of the business are equal to equity, which means all the assets of the business are the assets which have been invested by the owner. That is what this means, right? All the resources are equal to the resources of the owner. That means all the assets have been invested by the owner. That's right. That's right, that is what it shows. Very simple. Okay. Take this point. Take this point. This equation is possible, children, only in a business which has no external liabilities. This situation is prevalent, or this situation is there in a business where there are no loans. Nothing has been borrowed from external parties. All the assets, all the resources have been brought in by the owner. Brought in by the owner. Nothing has been taken or borrowed from outsiders. So all the assets, all the resources are equal to owner's resources. That means all the resources are mine. Only I have invested. Example. It's fun, right? Example. Amal started a business. Okay. Amal. Good strong name. Amal. Amal started a business. So the owner is Amal. He must be a sole trader. Right? Let's find out. Amal started a business investing 500,000 in cash. What is the amount that he invested, children? 500,000. 500,000 in cash. So this owner Amal brought in cash 500,000 and put that money, invested that money in the business. Here assets, cash of the business is equal to 500,000. So only that cash, that amount of cash is now existing in the business. I mean, only that amount of cash is there in the business. Okay, only 500,000. Using that 500,000, Amal can start his business. Can maybe rent a building. Pay the key money with this 500,000. Now he has a building, a shop. Okay, and he can move into the building and he can arrange, you know, the inside, the interior, using this 500,000. Spend some more on buying furniture, buying a cash machine, or on buying showcases and racks for his shop. He can do all the initial setup. He can do the initial setup by using this money, which is already in the business, 500,000. Yeah? If this 500,000 is enough to start his business, he doesn't need to borrow anything from anyone. You get it, right? He doesn't need to borrow money from anyone. He can start his business with this 500,000. So, this 500,000, this total amount, belongs to the owner, which is Amal. And that is the only amount of cash or only amount of money which is in that business. Okay? In that case, children, assets, okay, assets are equal to equity. In other words, all the resources belong to the owner. So, only 500,000 is in the business. Only 500,000 is in the business. That 500,000 is the owner's equity or the owner's capital. That is another word which we can use for equity. Do you get it? Yeah, sure, because it's so easy, right? Take that point to your heads, children. Only in a business which has no external liabilities, or when the owner has not borrowed money from external parties for the business, only in that situation this equation is possible, or this equation can be used. So what is the most basic equation, children? The most simplest version, that is assets equals to equity. Okay, good. Here we have something here. What is this? All right, just checking this out, huh? It shows the exact thing which I explained here. This shows the exact thing which I explained here. Resources in the business are equal to the resources supplied by the owner. Simple thing. Resources in the business. Now you give me a word or name for all the resources in the business. What can we call all the resources in the business? What is the word? Assets. Assets equals to, give me another name for resources supplied by the owner. Equity. That's very good. Or we can say capital. Equity or capital. Same thing, right? Simple. Moving to equations which are a little more complex than that simple one. Now we have assets equal to equity plus liabilities. Assets equal to equity plus liabilities. Now we are getting the risky stuff. Risky. Okay. What are the risky stuff? These are the risky stuff. Liabilities. Children, in this equation, it is shown that there are external liabilities which are borrowed from external parties to invest in the business. Okay? There are external liabilities which are borrowed. Liabilities are the payables or owings or borrowed resources which are invested in the business. So, external liabilities. But if I ask you this question, children, those external liabilities which were borrowed, like loans or like other assets such as goods which are bought without paying, on credit, goods which are bought for our business without paying Those are also liabilities, right? We have not paid. Now we are owing those suppliers. We have to pay them. Liabilities. Credit purchases. We have borrowed. It's like we have borrowed those goods. We haven't still paid. Like we borrowed money from a bank as a loan. We have borrowed goods from a supplier, from a company. All those are liabilities. I'm asking you this question. Aren't those liabilities when they come to the business? Aren't those liabilities, aren't those money or goods assets to our business? Just forget the fact that they are borrowed. Forget about the fact that they're borrowed. Forget about the borrowed part. Borrowed? Okay, we don't know whether they are borrowed. But goods came into the business. A new stock. Isn't that stock an asset? Of course. So external liabilities are borrowed from external parties, and those become assets too. Not only the owner invests assets to the business, even external parties can invest assets to the business, but those external assets, external borrowings fall under this category, liabilities. Children, did you get that? Yes? Okay. Good. In this case, children, we have equity. We have equity. And we have liabilities. So, the assets or the resources which belong to the owner, and the assets or resources which belong to external parties. All those get together and form the total assets of the business. Form the total assets of the business. That is why this equation, that is what this equation shows. This is the most common equation, the version of the equation, most common version. Assets equals equity plus liabilities. Okay, children, can we move on? Are you clear with this? Good. Reading out. In many cases, other people besides the owner of the business will have supplied some of the assets. Yeah, we just discussed that. Money in the form of a loan. Bingo. Or perhaps equipments purchased on credit. The amounts owing to these people are called liabilities. We know. When this is the case, the accounting equation changes to assets equals capital plus liabilities. Same thing. Same thing, children. In this case, the equation should be shown as assets equals to capital plus liabilities. So, it is shown again in this manner. Let's check it out. It's the same thing. All the resources are equal to owner's resources plus borrowed resources. Now you are going to give me the wordings, the correct wordings. All the resources are called what? Assets. Very good, children. All the resources are called assets. And owner's resources are called what? Owner's resources are called what? Owner's resources are called equity. Can you give me another word, please, for equity? Capital. Good. Equity or capital. Plus external borrowings, or the resources which we have borrowed from external parties to invest to the business. Borrowed resources are called liabilities. Excellent. So, likewise, we learn the most common, or probably the equation that you will use mostly. Assets equals capital plus liabilities, or assets equals equity plus liabilities. Okay, shall we move on? We have some stuff, fun stuff. Now we are down to calculations. You are asking me, sir, where are the calculations? Sir, where are the digits? Sir, where are the numbers? Sir, isn't it about numbers and calculations and additions and subtractions? Here comes. This side we have assets. Assets. I will write A for assets. Assets. And assets equals, this is equity. I will write E for equity. Okay, these are liabilities. If 100 of assets, okay, 100 of assets are existing, or 100 worth of assets exist in a business, and out of that 100, 80 is equity. Or in other words, if out of this 100, 80 belongs to the owner, how much of externally borrowed stuff should be here? Simple, simple, very simple. It's 20. Good. I'm not going to do the calculations here, children. These are very simple calculations, and you are O-level students. You should be able to figure it out. Should be able to figure it out. If 100 worth of assets exist in a business, out of those 100, 80 is invested by the owner, or 80 belongs to me, the owner. What's the remaining amount? 20. 20 must be borrowed from external parties. 20. Let's go ahead. If 500 worth of assets are in a business, and we don't know the equity, how much is invested by the owner, but we know the liabilities, that is 100. If liabilities are 100, or only 100 worth of assets or resources are borrowed, but 500 of assets, total assets are there, 400 must have been invested by the owner. 500 of assets are there. Out of that 500, 100 of assets have been borrowed, which are liabilities. That means the remaining 400 is the equity. Remember, children, remember, only equity and liabilities form assets. There are no other things. For now, you remember. Likewise. Only equity, owner's investment, the resources invested by the owner, and the resources borrowed from external parties, only these two form the total assets. Okay? Right. Next, I want you to tell me, if 50 of assets exist in a business, out of that 50, 25 only is invested by the owner, how much would have been borrowed? 25. So the addition of these two forms this amount. 25 plus 25 equals to 50. 1,000 worth of assets are in a business. Out of that 1,000 worth of assets, only 900, or we can't say only 900. 900 itself is invested by the owner. 1,000 worth of assets are there. Okay, out of that 1,000, 900 is invested by the owner. 9. If this is 1,000, 9. This is 10, right? Out of that 10, 9 is invested by the owner. So only 1 must have been borrowed. It makes liabilities 100. So 900 plus 100, 900 plus 100 equals to 1,000. Simple stuff. So we'll just finish it off, okay? If assets are 10, liabilities are 3, tell me the equity. That's right, children. Very good. If assets are 20,000, if 20,000 worth of assets are there, out of that 20,000, 10,000 are liabilities. How much should be the equity? 10,000. Finally, if 150,000 worth of assets are there in a business, and out of that 150,000, 50,000 only is equity. If only 50,000 is equity, 100,000 of liabilities must be there. So 100 plus 50, 150. Total assets are formed by the addition of equity and liabilities. Equity plus liabilities. More exercises. More calculations. Let's find out whether you can do the calculations in the given period, in the given few minutes. All right? Okay, let's go. Oh, we have to put the symbols. There are no symbols here, see? Assets, what should be here? And liabilities given, what should be here? Tell me. Assets, equal mark. Equal mark. Equal mark. And then liabilities are here. Assets equals liabilities. What should be here? Plus. Liabilities plus capital. Don't get confused. Earlier we had assets equals equity plus liabilities. So equity was here and liabilities was here. Or in other words, equity was the first element, then liabilities. Equity means capital, we know that. So capital plus liabilities. Now in this screen we have liabilities plus capital. It's the same thing. No difference, right? So then we can say assets equals liabilities plus capital, or assets equals capital plus liabilities. Same thing. No difference. We'll do the calculations to finish it off. Tell me now, it's your turn. If assets are 20,000, out of that 3,400 is liabilities. How much is the capital? How much? 16,600. Okay. Yeah. Do you want me to do the addition also? I'll do once. Okay. Once. Here. 16,600. Okay, I will write it here. 16,600 plus 3,400. Adding 0, 0, 0. 6 plus 3, 9. With this remainder 1, 0. 1 remainder, 1 plus 1, 2. 20,000 comes. So this amount is correct. We have done the calculation correctly. 16,600 plus 3,400 equals to 20,000 assets. Going ahead. I'm finding it difficult to trace the rows. So let's use a line. Okay. Second, assets, we have 23,000 children, 23,000 assets, okay. Out of that, liabilities, 8,800. So what should you do? What should you do? We have assets worth of 23,000 here. Out of that, liabilities 8,800. Simple, right? Subtract this from this. How much should be the capital? 23,000 minus 8,800. How much is the answer? Can you do the calculation quickly? 23,000 minus 8,800. It becomes 14,200. Is that correct now? Is this correct? 14,200. Let's see. The last rough work that I'm going to do for you. 8,800. Okay. Add 0 plus 0, 0. 8 plus 2 becomes 10. 1 remainder. 8 plus 4 becomes 12. With this one, it's 13. And 1 remainder, 1 plus 1, 2, 23,000. Didn't we get the amount, the total assets? Yes. So, if this is given, you minus this from this. If this is given, capital is given, you minus capital from this assets. All right, drawing lines. Otherwise, it's gonna get confusing, right? Okay. 19,200 worth of assets are given. Out of those assets, 3,200 is capital. So 19,200 minus 3,200. How much should come here? 19,200 minus 3,200. 16,000. 16,000. Correct. Next one. 8,100 worth of assets are here. Okay. We don't know the liabilities, but capital we have 6,500. Out of the assets 8,100, 6,500 is invested by the owner, capital. So how much should be here? 6,500 minus from 8,100. Correct? Correct? Simple. Then we have, I'm not doing the calculation, it's I would look silly to do a rough work to get this answer. It's a simple calculation. You are doing the calculations, not me. Right? So let's do the next one. We don't know the assets now. Okay? But we have 7,900 worth of liabilities and 17,300 worth of capital. Now it's easy. Now what we are going to do is we are going to add these two. Add 17,300 plus 7,900. How much? 17,300 plus 7,900. The total should be here. How much? 20. 5,000. 25,200. Easy thing, right? So likewise, you should be able to calculate or figure out how the assets are formed with liabilities and capital. Last one, right? We don't know the assets, but we have 18,500 worth of liabilities. 18,500 worth of liabilities plus 51,900 worth of capital. This much of assets invested by the owner, this much of assets borrowed from external parties. So this plus this, it forms the assets. How much? 51,000 plus 18,500. So 51,000, 61,000, 69,000, 69,500, 69,000, 70,000, 400. Is that 900? Yeah. Then this becomes 70,000, 400. Are you still trying to figure out how this 70,400 came? No. Simple additions. Do the rest of the activity by yourself. Right, children, I hope you have done the second part of the exercise, finding the missing figure out of assets, liabilities and capital. I'll put the symbols here. Assets equals liabilities plus capital. So now we have 55,000 worth of assets. Out of that we have liabilities of 16,900. And how much could be the capital? Tell me. How much did you get? 40, 30, 38,000, 38,100. Right, that is my calculation. I don't know whether you have got the correct answer. I got 38,100. Did you get that? 55,000 assets. Only 16,900 out of that is liabilities. The remainder is 38,100. Correct, right? Second, we have assets we don't know. 17,200 of liabilities and 34,400 worth of capital. 17,200 plus 34,400. I got 51,600. Okay. 51,600. Did you get that? Okay, good. Next we have 36,100 worth of assets. We don't know the liabilities, but we know the capital. It is 28,500. 36,100 total assets. Out of that, only 28,500 is capital. So when you subtract this from this, how much do you get? 7,600. I hope you got this answer. Okay. Next one, we have 119,500 worth of assets. Out of that, 15,400 is the liabilities. 1,19,500 minus 15,400. How much should be here? 104, I think. 104,100. 104,100. Correct. Yeah. Next one. We have 88,000 worth of assets. We don't know the liabilities. We know the capital, that is 62,000. So 88,000 minus 62,000. How much do you get? 88,000 minus 62,000. 26,000, right? 26,000. Finally, we have assets we don't know, but we have liabilities worth of 49,000, capital worth of 110,000. Add those two and you get the total assets. That is 159,000. Is this correct? 159. Good. That way, children, we end today's session. We learnt about the accounting equation and the relationship between the elements, assets, liabilities and capital. That is what the accounting equation demonstrates. Aren't we forgetting something? All right. Good if you remembered. We didn't write the definition of accounting equation. Now that you know what the accounting equation shows, yourself you can come up with the definition. What do you say? We were waiting for this until the last moment. Yeah, very good. Accounting equation shows the relationship between assets of a business and how the ownership of the assets the accounting equation is the equation which shows the relationship between assets of a business and how the ownership of assets have been formed. There you go, children. Don't worry, you are not going to get to define the accounting equation. Very rarely the exam or the past papers, this type of a question have come asking to define the accounting equation. You're not gonna get a question in such a way like define the accounting equation or what is the accounting equation. You will get questions to apply the accounting equation to a given situation of a business and to calculate the equity using accounting equation, or sometimes to calculate the liabilities like we did, or sometimes to calculate the assets using the accounting equation. So with that, children, we wind up today's session. This is Unit 5, Accounting Equation. First session have come to an end, but I hope to see you in the coming sessions to finish off this lesson. Thank you very much for being with me. I'll see you soon.